Good morning, everyone, and welcome to October's Market Insights Economic Trends Review. As always, I'm Paul Nalbandian, joined by my wonderful colleague, Temi the Great Koji. Great to have some of you joining us already. Usually have people come on a little bit late, so I'd like to take this opportunity to introduce ourselves if anyone is new this month. Like I said, I'm Paul Nalbandian. I am a realtor licensed in DC, Maryland, and Virginia with Fulcrum Residential, one of the top real estate teams in the country. We are also proudly affiliated with Keller Williams Capital Properties, where I have served on the Agent Leadership Council going on 6 years. Temi the Great, would you like to introduce yourself?
I am Temi. I'm a real estate agent. I've been a real estate agent for 17 years now. Hey, Ty. Hey, Zachary. Thanks for joining. I didn't realize we were live earlier, so I was just like, where are these people commenting?
Yeah, sorry about that.
When we're not live. Sorry.
Went live early with the banner and the base page and getting rolling at 8 o'clock. Welcome, everybody. I would love it if people can just pop on there, say where you are from. Let us know if you're an agent, if you're with title, if you are a lender, if you're a consumer. If you are an agent, let us know where you are licensed and which brokerage. Love to see everybody on here. Hey, Mark, how are you doing? Zach, Tom. All right. So we are about to get rolling momentarily. First, my budding tradition. Let's go back to this so you can see. The coffee of the day. This is a wonderful red Catuai from Kolo Coffee in Berlin. Just came back from a wonderful trip to Berlin. This is a Costa Rican coffee from Terrazzo, natural red Catuai. Absolutely delicious. If anyone is in Berlin and loves coffee, I would say that was the finest pour over I have had in quite some time there at Kolo Coffee. All right, we are going to get jumping into this right now. As always, we are going to follow our usual format. The information changes. The format, we try to keep pretty consistent, cover all of the things most important to those of you out there. We're going to start looking at mortgage rates and economic data. Then we're going to pay a little bit more attention about what's going on in the federal government right now, how that is affecting the economy and the real estate market. And then also we're going to take a closer look for the first time, because some new data has become available, at least some new data to me. They've been doing it for a few months now, but the Brookings Institute has started looking into the DMV economy specifically and providing some helpful insights. So we're going to touch on that a little bit. Then we are going to go into real estate specific data. We're going to take a look at the DMV market for the most recently reported month, which is September. Then we are going to look at the weekly data to get you most up to date on what is happening. We're also going to break down everything on a county level for those of you focusing more specifically in certain areas. We are going to touch on that. Then we're going to talk about more kind of overlaid upon all of this is what's happening with the federal government. How is that affecting everything? We're going to continue that into real estate. Then we're going to close with the key takeaways. Temi, would you like to add anything else before we jump in and get started?
No, just excited to have you guys all on.
Me too. I'm still a little jet lagged. Just got back late Monday night, but this is, what are we at here? This is like 4 in the afternoon, so should be firing on all cylinders, hopefully. Okay, we excuse me, love to hear where do people think mortgage rates are at, and then also who has locked in the past week and what have your clients locked at? Throw that in the chat, please. And if you indicate if you do have clients that have locked within the past week, please let us know whether it was fee simple or a condo. And then Mark, we have our wonderful lender partner, Mark Linkowitz, on here with Envoy Mortgage. Mark, could you let us know, what are your clients locking at within the past week? What do you have people locking at with the various products? Would love to hear 30-year for fee simple and condo, but then also it's always good to know FHA, jumbos, VA, that kind of thing. 6-1, nice. Yeah, and that's what I would expect. So as you can see, mortgage rates bumped a little bit after we met last month, but then they came back down again. So as of yesterday, Mortgage News Daily was reporting 617, and that's right in line with what Christina said her clients got. 6-1. Marcus saying 6125 on a 30-year. Tom 6125. Yeah. So what people are seeing in the actual market is matching what's being reported. These are 589. Good for your clients, Maggie. That is wonderful. That's a really nice rate. It's funny. There was a time not so long ago where if your rate started with a 3 instead of a 2, your clients were like, it's all right. Now seeing a 5 there, and it's like, whoa, these are some good rates here. These people are getting a couple of weeks ago. Well, if they really actually in the past couple of weeks, like I said, mortgage rates popped up just a little bit, and then they've been declining ever so slightly in the last week. So all products are pretty much right around the same as where they were at when we met last month, just within a few bips. And where is all of this headed? So one thing I've said with mortgage rates is that kind of the only thing we know for certain is there's probably going to be volatility and continued volatility. And right now with the federal government shutdown, which we'll go into in a little bit more detail later, there's a lot more uncertainty hanging over our heads because nobody knows when it's going to end. And so that's kind of that's a big element here. But then also we have continued tariff policies. A lot of those, there's talk, those are being drawn back. There are a lot of products that are being exempted. So they're probably not going to fully hit at the levels that have been either agreed to or publicized. Just a lot of uncertainty. Mark, I would love to have your input here and where you think mortgage rates are headed for the remainder of the year. One thing I do want to add that is very clear now is I talked about, and I'll go into why we talk about the economy, that Chairman Powell recently said, basically, there will be no more quantitative easing when it comes to mortgage rates, which talk about in more detail in just a minute, but that's lever of the Federal Reserve where they buy mortgage-backed securities, and that can help bring mortgage rates down. So not only is the Federal Reserve rolling those assets off their balance sheets, but Chairman Powell said there is zero intention to purchase any more anytime in the foreseeable future. All right, how are people feeling about the economy?
I think it's I'll say, like, I feel like it's the word uncertain is rolling around real strong. I feel like you've probably heard that a lot this year, Paul, and it hasn't gone away. It hasn't slowed down. It's just been uncertain.
Sorry, just had a kind of an urgent message regarding a transaction, which always seems to come up during this time. Downward pressure on rates, Mark saying, through the end of the year. And that would be nice. That would be nice if we were seeing some more fives in our future. So really quickly, want to touch on why I talk about the economy and why it is important. And this is overly simplified, but I tried to add enough detail in order for it to make sense. Okay, so why do we talk about the economy? It is because the economy impacts the bond market. Mortgage-backed securities are part of the bond market. Mortgage-backed securities are the most important reason for why mortgage rates are where they're at, because most mortgages, when you hear conforming mortgages, those are repackaged into giant blocks of these MBS products, and they're sold on the open market where they're competing with a variety of other products, a variety of other bonds, which are debt instruments, and then also including the 10-year treasury. All right, so you look at the major components of the economy, and you have employment, you have inflation, retail sales, manufacturing output, industrial production, and then the economy both influences and is influenced by Federal Reserve policy. And largely Federal Reserve, what are the levers they have to impact things? It's the federal funds rate, which we talk about every meeting, whether they're going to raise it, whether they're going to lower it, whether they're going to keep it the same. And then they have quantitative tightening, quantitative easing, QT or QE. And what that is, basically quantitative easing, excuse me, they're pumping money into the economy. Quantitative tightening, pulling money out of the economy. Examples of QE, which I touched on before, is during the pandemic, they were buying massive, just billions and billions and billions and millions and billions of dollars worth of 10-year treasuries primarily and mortgage-backed securities. And what that did is it artificially altered, pumped a lot of money into the economy, most specifically the bond market. And if you have the biggest dog on the block, which is the Federal Reserve, buying up massive swaths of these products, then you don't have to offer quite as high a rate of return in order to get these products sold. And that's why we saw the rates drop very low. Then we also have, more impactful than it has ever been, is tariffs and trade policy. Because the tariffs are so extreme and what's been proposed is so extreme, those can also have an outsized impact in what is happening with all of these things. Those all go into the bond market. If you can sell mortgage-backed securities at a lower rate, if investors will purchase them, then you can offer lower mortgage rates because there has to be a spread between the mortgage rate and the rate offered to investors. And that's how we end up with the mortgage rates we are at. When you get the deck, you'll have a little bit more detail going into that. Okay, now we're going to touch on the economy for the reasons I just mentioned. GDP, recently the final estimate was released at the end of last month, and it was actually upwardly revised. It came in at 3.8. It was at 3.3 before from the advance. So it's an even stronger rebound from Q1 than previously thought. There is still a lot of little chinks in the armor, things we are seeing that could represent some slowdown in the economy and things not looking so rosy in the future. But at least as of right now, you have last quarter numbers coming in very high. And then right now, the Federal Reserve of Atlanta has a GDP Now model, which forecasts GDP for the next quarter. And right now, their model is saying 3.9, which is a very vibrant quarter. Just want to note, as I always say, the Federal Reserve of Atlanta Now model is coming in, it always comes in a little higher than pretty much any other blue chip consensus. So just keep that in mind. You can see the band here. The rest of the blue chip projections for the GDP for Q3 is in the range of 1.5% to 3%. Okay. Now, what's that? We see that somebody's gone fishing. And most of
you started using artwork, Paul. We love it.
Most of you are probably aware that the federal government is currently shut down. That is impacting so many things with our economy, but it's also impacting the data that is reported. Most of the key data that is reported comes from the federal government. And while they are shut down, that data has not been reported yet. So I have to attend to something super quickly. But Temi, why don't you let us know, what are you thinking about the economy right now? What are you feeling? What are your clients saying?
I try to be really positive at all times. I feel like this year is a lot harder just because wherever I go, more than ever, it's the word uncertainty is like being used, and it's there's just so much happening. It's hard to really stay positive all the time. So being able to move the people forward that are able to move forward is really important. I think with us as real estate agents, there are still people who want to buy, who want to sell, helping guide those clients. And for our clients who are in not so great positions, also, being there for them and helping them to navigate real estate is really important. What are you guys seeing? What are you guys feeling? Is a word uncertain being used with you guys, or like, is everything peachy? Like, what are you guys seeing in the market right now? Okay, Maggie says, from a real estate perspective, people are definitely cautious, but not necessarily pessimistic. Yeah, I love that, Maggie. Yeah, that's true. So there are people who are cautious. I am hearing people who are really pessimistic. So I'm seeing a lot more caution. I think that's the best word, Maggie. I'm seeing a lot more caution in this year, in this market, than I've really ever seen before. So that's like, actually, except for during the crash, like when we had the 2007, 2008 market crash, everyone who was getting in was very cautious, very, but here it's just everyone's the cautious I think is the perfect word for this.
Wonderful. Yeah, and it's also, when you talk about what are people doing right now, a lot of people are just kind of on pause for the moment while the federal government is shut down, because it's like, what's happening? We don't know. So a little bit more uncertainty. Okay, we are, anytime you see this this wonderful little gentleman who just caught tonight's dinner, that means that these are data sets that have not been provided as scheduled because the federal government is shut down. So we have absolutely no CPI data. And that's even more concerning than it would otherwise be, because I've talked about for many months now that because of the federal government hiring freeze and the inability for the Bureau of Labor Statistics to hire more of these price checkers, they have been having to make guesses more and more and more often for these prices. So it's like, not only do we not have any CPI inflation data for the most recently, what would be the most recently reported month, all the data for the prior months are essentially a third of them are guesses. So this is really kind of a troubling time for everyone who relies on this data, which is the Federal Reserve, which is all of the markets. All of this stuff impacts our daily lives, whether we realize it or not. It's like already this data was a little more unreliable, and then all of a sudden it just stopped. So this is problematic for a variety of reasons. And yeah, Shelly, I love that point about buyers taking advantage of the market. That's one of my key takeaways I'm going to talk about. It's like, hey, if you're a buyer and things are still stable, like you may not have as much competition. Sorry to cut you off there, Timmy.
No, I was going to point out the same thing. I love your comment. Like Maggie, Shelly, like you guys are on point. I love your comment, Shelly. Like now is probably the most strategic and best time to purchase, because, maybe, 2 years ago you would have, gotten maybe a slightly lower interest rate, but maybe you weren't getting your closing costs paid for. Maybe you weren't getting a little bit of a lower price. Now, like, a lot of sellers are willing to give more, as the homes stay on the market a little bit longer. So great point, Shelly.
Absolutely. Sorry, we're just sometimes when the unexpected always comes up in real estate, and you have something where someone needs access to a property, or there's a problem that needs to be dealt with right away, or it can cause serious problems just having to attend to that again.
No worries. I love your little fishing person on screen, Paul. All right, Maggie says, my focus has been on helping clients control what can be controlled: pricing, timing, and preparation, instead of stressing over what they can't, like rates and government decisions. Yeah, I love that, Maggie. Yeah, I think being as strategic as possible as a real estate agent right now is so important. And so I love your comment, Maggie, just as far as like you're helping for the clients who want to purchase and who want to sell right now, helping them focus on what's important, and in order to help them move forward, because there's so much conversation going on, and so keeping them to their goal and helping them get to their goal is more important now more than ever. Great job, Maggie.
All right, jumping ahead. Unemployment, the jobs report. There was no jobs report. As we talked about last month, the Bureau of Labor Statistics head was fired because the administration didn't like the prior jobs report. They had floated the idea of suspending the jobs report indefinitely, and now with the government shutdown, that has happened. So no jobs report, no unemployment rate. All right, not too helpful for me to just keep telling you all of this data that we don't have. So what do we have? And I tried to pay a little bit more attention to other avenues, other resources to get this information. And these are things, there is the government that the federal data, the data that the federal government, jet lag, the data that the federal government has provided historically has been so much more detailed, so much more accurate, so much more important than almost any other source, that is really the most important thing to pay attention to. But in the void of the government shutdown, we can look at some other things. So when it comes to employment data, what else do we have? And there are three sources that provide useful economic data. One is ADP. ADP processes, helps companies with employment, their logistics admin on the back end. And they are a massive company, have tens of millions of customers. And so they have this data from their customers. And so they, according to their data, they said that 32,000 jobs were lost nationally in September. So this is continued evidence of a softening jobs market, but this isn't a proxy for the Government Bureau of Labor Statistics jobs report, because this is private only, doesn't include public sector, and it's only ADP clients, which tend to be mid-sized firms. So you don't have the largest employers, you don't have the federal government, you don't have any governmental employees, and then you also don't have like the lower mom and pop shops, smaller businesses and things like that. So because of federal government layoffs, this ADP information does not include government. So the situation based just upon that is probably worse. Then we have the Revelio monthly jobs report. So they do a total non-farm jobs report similar to the federal government. According to them, they added 60,000. We added 60,000 jobs in September. And so Revelio kind of views their report and ADP's report as complementary. And using them together, they estimated that if there was a federal government jobs report, they would have reported a gain of just 32,000 jobs. And this is, we had a month where we lost jobs, but 32,000 jobs added would be the very low end of where we've been at for quite some time. Have many, many months over 100,000, a lot of months over 200,000, and months over 300,000. Then we have Indeed. Probably most of you are familiar with Indeed, job posting platform. They analyze these jobs that are posted. And so using real-time data from their job posts, they suggest that the labor market also has cooled further because postings were down 2.5% from the month prior. So they're saying, hey, all of these entities that are looking to hire people, those overall numbers have declined by 2.5%. Okay, now other data that we have, it's right now consumer sentiment is not very positive. And that's one of the reasons why I asked, what are your clients feeling? What are your clients thinking? And pulled up some data right here. I didn't use the University of Michigan survey. That's considered a very kind of the gold standard for consumer sentiment, but because that's just been unchanged lately. According to the University of Michigan survey, consumer sentiment has dropped recently and it's been at the same level for a couple of months. But some additional surveys, almost 2/3 of Americans believe the U.S. will enter a recession within the next 12 months, according to a September survey. A Wall Street Journal poll recently found that only 25% of those surveyed say that they have a good chance of improving their standard of living, and that is a record low with that survey. And you might see that, okay, there's a disconnect here, Paul. You talked about GDP is projected to be fairly high. The stock market is doing well. S&P year to date, I think, is up 15%. And that's important. And this is also why I'm curious to hear about the experience or the thoughts or the sentiment of our clients on here, because right now, more than ever, and this is legitimately, I say more than ever, because it is, according to the data, that the top 10% of earners account for a greater share of U.S. spending than they have in our lifetime. So the top 10% of earners account for 50% of U.S. spending. And I mentioned a while back, U.S. spending accounts for 70% of the U.S. economy. And so it's not necessarily surprising that a lot of people can feel like things aren't going well when the major indices or the major areas of information are saying the economy is chugging along well. And now going back to why I'd love to hear what people on this call are feeling with their clients. And I'm curious because a lot of our clients, I mean, we live in an affluent area. The cost of a one-bedroom condo in DC is higher than a massive detached one-bedroom home on an acre in a lot of areas. And generally, that's also why during recessions, this real estate market tends to do relatively well, because a lot of the jobs here are recession-proof. And so it wouldn't surprise me if what we're hearing from a lot of our clients is that things are going relatively well and maybe not as dour as some of these surveys are saying. But as always, don't like to make assumptions. And so love to get this granular level of information that I can't pull from sources. It's like, what are you all seeing on a day-to-day basis? Okay, now just going back to that, in a survey of those making $30,000 to $130,000, 70% said their income was falling behind the cost of living. So there there's a lot of worry, a lot of concern about what's going on in the economy. And with the government shutdown, a lot of that is just enhanced. Then, just cap this off before we move on, the chief economist at Moody's estimates right now that 22 states and one district, not sure how many districts there are out there in the United States, so probably not a surprise which district that is, but 22 states and one district are already in a recession. And that's basically our area. It includes Maryland, Virginia, and the District of Columbia. So at least according to the chief economist at Moody's, our area is already in a recession. And I guess might as well mention before we move on, what is a recession? Kind of a general term people talk about is 2 consecutive quarters of economic contraction. The official definition of a recession is basically when the National Bureau of Economic Research, NBER, says there was a recession. And it's always backward looking. You never know, like, when you're entering into a recession. So it is very possible that this area is having an economic contraction. California and New York are doing a little better. And so you have just massive chunks of the economy. California and New York would represent some of the largest countries in the world if they weren't part of the United States. And so you have them kind of holding up some of the other areas. But just thought that was interesting to note. Okay, now how will the federal government shutdown specifically, how will it affect all of this if it continues? Now, we're spending a little bit more time on this today just because we can't spend the time on the data that doesn't exist. And interesting tidbit, just want to note that right now, the federal government has been shut down longer under President Trump than it has for all other shutdowns combined in history. And the reason I note that is not to play politics, but we're at the second longest shutdown ever. The first longest was during his first term. So that just means we are very close to entering uncharted territory. I try to pull as much data as I can. I try to talk to as many experts as I can, try to give you as much insight as I can. But it's important to note we're very close to entering a period that has never happened before. So we can prognosticate, but in all honesty, no one really knows the full effects of what will happen if this government shutdown stretches longer. Some effects it could have is, without a doubt, so this is one certainty, if the government shutdown stretches on, and this has already happened, it will have a negative impact on the economy. So the Secretary of Treasury just came out and said the government shutdown is costing the U.S. economy $15 billion a day. Chief economist at J.P. Morgan knows a thing or two about the market, estimates that a government shutdown subtracts around 0.1% from annualized GDP for each week of a shutdown. These are massive, massive, massive numbers. There is no entity in the world larger than the federal government. So it closing down, it closing its coffers, it restricting the majority of its payments are going to have a huge trickle-down effect on everything else. So economy. It will definitely negatively affect the economy. The longer it goes on, the greater the chances we'll be heading into a recession. And then also, and I've already touched on this in individual instances, not having this data is a huge problem. The Federal Reserve, all markets rely on this data. And I've said before that US markets have outperformed their counterparts throughout the world because of how reliable the data the federal government provides is. And so we're able to get greater efficiency, greater return on our investments of labor and capital than other countries have because of the reliability of this data. So what's the flip side of that? When we don't have this data, everything becomes more inefficient. And that's why we talk about the economy contracting, losing wealth. It's because everything is less efficient right now than it would have otherwise been. You have all of these business leaders who are trying to make decisions without a full picture, and that will result in less efficient markets. Yeah. And just Maggie talking about, people who are financially comfortable second guessing big moves because things just feel unpredictable. Yeah, I was reading an article in the Wall Street Journal and they were talking about all of these people who it's like, this is like, they were looking at a more affluent group, but they said everything is fine, but they're scared as hell. And this guy is talking about, he's like, okay, it's like, I have a great rate on my mortgage. My stock portfolio is doing great, but I'm waiting for the bottom to fall out. And so even among higher earners, more secure, people who are more secure financially, yeah, there is a lot of worry. Okay, now real estate specifically, like what's important for this group, how is it going to affect real estate? And there's a lot of analysis that shows when the government shuts down, it results in a dip in transactions leading up to the government shutdown because people are worried about it coming and they're pausing decisions or pausing actions. Then there's a continued decline during the shutdown and then a rebound after. So the way to think of it is kind of like the same thing for federal government employees. And sorry, Shelley and the Pratt family, a lot of people are experiencing a little bit of pain right now as they start to miss those paychecks. But it's like what has happened historically with federal government employees? Their paychecks stop. So their income temporarily stops. And then when the government reopens, they get all that back pay. And hopefully that'll happen again. That's kind of think of that in the context of the real estate market. It's like the government shuts down, you know, where you pull back those transactions, and then as soon as the government reopens, they kind of all come back again. So historically, that's what's happened. And so if we're experiencing a little bit of a dip, and when we talk about the data represents that. We're seeing a slowdown in pendings. That should come back. We should see a bump once the federal government reopens. But like I said, if this thing drags on, we're already in the 20s. The longest shutdown ever was 35 days. So if this extends another 2 weeks, we're in unprecedented territory, and who knows what will happen. And so one specific reason, which is obvious for why transactions and pendings and showings would drop in this area, is the percentage of federal government employees who are no longer receiving paychecks. And then a few other specific things. The National Flood Insurance Program, their authority has expired. They can issue no more insurance policies. So if you're trying to purchase a home in an area that requires flood insurance and you can't get a policy, you can't close that transaction. And the reason, not to get too far in the weeds, for the National Flood Insurance Program is that there are a lot of houses in areas where private lenders won't offer insurance policies because it doesn't make sense. It's just the risk is too high. And so when you have that, I know I've heard that a lot of private insurers are trying to jump in to fill this void. But like I said, the whole reason for this government program on flood insurance is because private insurers in a lot of areas aren't willing to assume that risk. So that can just stop a lot of transactions, not necessarily here. I mean, we do have homes in flood areas in here, but it's not like the bulk of the area. And then also, and this, I would love to hear this from anyone who has done a deal recently. I'll chime in because I have, but FHA and VA both seem to be running along relatively smoothly, but a prolonged shutdown would have to result in delays for both types of loans. It would just have to, because if they keep going with reduced staffing, there's no way they can keep up with it. But like I said, so my personal experience, just had a transaction close with a VA assumption. We didn't have any delays as a result of the government shutdown. And then have a transaction that's about to close on an FHA loan, and we are experiencing no delays from the government because of that connection. But would love to hear anybody who has had experience with those two products, and specifically if you are experiencing delays already. Go ahead.
I think so I heard one person being delayed. I believe it's because they have a down payment assistance product, and that is because the government shutdown is affecting that. So they literally can't close because of that, I believe. So I just reached out to them and just asked for clarity. But I know that they were supposed to close last week, and because of the shutdown, they had to delay it. So it wasn't necessarily because of FHA or VA. It was more so because of a down payment assistance product that was linked to the government.
Yeah, and Mark just chimed in. Thank you, Tammy. Mark just chimed in that right now his experiences, stuff with FHA and VA, is kind of humming along. But Mark, please let me know. So this next item is some verification that lenders need to do rely on government data. And so income verifications that rely on IRS data could be delayed. Requests for Social Security number verification from SSA could be delayed. Mark, please let us know if you've had any specific experience right there in trying to verify data through government sources and have been unable to. Short sale approvals, Carolyn, that's a great example. There's, I don't personally deal with a lot of short sales, and so I hadn't even thought of that, but that makes perfect sense. Thank you.
That's a really good point. And I think Mark mentioned earlier, getting like IRS transcripts and things like that are a lot slower. So making sure that you're on top of that. Yeah.
Absolutely. All right. When is the next Fed meeting? What is expected? Mark, I love that. That's great insight. And then I love the plug to be responsive to your loan officer, which is, I mean, for what it's worth, that's something I tell anytime I have a buyer go under contract. I say the two most important, well, actually, three most important things for you right now are get that EMD in within the prescribed timeline. Start your home insurance application ASAP, because it will almost certainly be more difficult than it ever has been and will drive you to the brink of sanity just because of how stressed the insurance market is. And then, Mark, I do specifically say, anytime your loan officer asks you for anything, provide it as soon as you possibly can. And that is now more important than ever because there are delays that could come up outside of your control. And so being ahead of the curve, being on track is even more important. Okay, the Fed will be meeting next week on October 28th and 29th. It's their first meeting. There hasn't been a meeting since we met last month. All expectations are there will be a quarter-point rate cut. And from some of the recent administration appointees, there will probably be some dissent saying we should have a larger rate cut. But just want to note, the Federal Reserve is suffering from the same data problem we are. The Fed relies on a lot of this governmental data. And so even it's a lot of smart people in that room and they have access to a lot of data sets, but they rely on a lot of governmental data that they don't currently have. Exacerbating that is, since 2018, the ADP employment data I talked about, the ADP had been reporting this data directly to the Federal Reserve with only like a week lag. And so the Federal Reserve used this to inform their decisions. A Federal Reserve governor made some comments that ADP didn't like at the end of August. And so they have since stopped sharing that information. So it's like we're at a time when the Federal Reserve has as little information as possible to make these decisions, and then they have even less. So something just to keep an eye on. 10-year Treasury, that revolves around what's happening in the market, not governmental provided data. Just checking to see where we're at right now. 3,989. So as of last night, it was 3,951. 10-year Treasury has been dropping since we met last month, but in the past week or so, still relatively consistent. Retail sales, we don't know. How are people? Who's buying stuff? Has anyone started Christmas or holiday shopping yet? Put in the comments what your retail spending has been. Anyone bought cars or TVs? Maybe we can come up with our own data set on that. But the federal government did not provide information on retail sales. Hold on, Tammy, just gonna run through this. And same thing with industrial production, manufacturing output. We do not know that. Now we are going to take a closer look at the DMV economy right after Tammy shares her insightful comments.
I was just gonna say I will be giving coupons on hugs for Christmas presents. So given that those are still good. Cost nothing.
That's a nice present. That's a nice present. Okay, one of the things about not having access to all of this data, so not covering things I normally cover, and then trying to make up for that by looking at other data sets, is I kind of don't have my cadence down. So I thought all of this stuff was going to go super quick, and then we'd have a ton of extra time to talk about real estate specific data, and I see that I'm falling behind schedule. So I'm just going to touch on this really quick, and then we're going to jump into the real estate data. So the Brookings Institute, and you can find this online if you just Google Brookings Institute DMV Monitor. They have started paying closer attention to what's happening in our area and providing some data on that. So just want to touch on a few things which kind of matches what the chief economist at Moody's said, that the area is already in a slight recession. So their data is suggesting that our area is more negatively impacted economically than other parts of the country. And, it's not a shocker given the federal government. Just want to know, there are more federal government employees outside of core DMV than there are inside of it. But as a percentage of the population, it's a little bit more of an impact. So according to Brookings, federal jobs are down 4.5% year over year in this area, compared to 2.1% overall. So we're feeling a bit more of the sting from federal government layoffs. And then DMV unemployment as a whole has risen by 0.6%, whereas unemployment has remained steady overall. So our labor market, our federal government labor market, is suffering a little, and then our overall labor market is suffering a little more unemployment in the metro area than there is nationwide. Venture capital investment how much money is flowing into the area. So venture capital investment was up overall 13.5% throughout the country, even higher in major metro areas, which we are, but it's down by almost a third in the DMV. So investment has shrunk as well. Personal bankruptcy rate increased at a lower rate from Q2 24 to 25 here. So more people declaring bankruptcy here than in the rest of the country. And then the commercial bankruptcy rate declined overall. It declined from Q2 2024 to 2025. And sorry, actually, this was me being a little sleepy finishing this deck. So the commercial bankruptcy rate here is a little worse than it is in the rest of the country. So in sum, yeah, we're starting to feel the pain just a little bit more than most other areas of the country. Okay, now we're going to jump into the DMV specific real estate market, and then we're going to break it down by county, and we're also then going to look at what's been happening in the last couple of weeks. But this is where I'd love people to pop in the comments, like, what are you seeing with your listings? Are you going under contract quickly? Are you not? What are you seeing with your buyers? Are you able to get under contract without competing, or are you still in multiple offer situations? That's the stuff we love to hear, because it is, and we're going to see this when we look at the county specific data. There's a lot of variance depending on where you might be handling these deals.
I will say, right. Hey, sorry. You asked a question. So piggyback on the statement I made about the down payment assistance being delayed. It was actually, the agent just got back to me. It's actually the transcript that delayed the closing, not the down payment assistance. So I want to make sure I give you guys correct data.
Nice. Thank you, Timmy. Okay, now going up to the 30,000 foot view, what are we looking at as far as overall transactions for the DMV? And it's very similar to where we have been, and where we have been like in recent months, but then also recent years. So you can see we're on track for 49,795 transactions. That is virtually the same pace we were on at the end of last month, and it's pretty close to the same pace we were on at the end of last year and the prior year. Let me look at it exactly. So yeah, 2024, 49,942 transactions, 2023, 48,950 transactions. So if you've been in real estate for a few years, the overall transaction level has been about the same. So in some ways, things should feel fairly similar, even though, as we know, some things are starting to feel a little bit different. Okay, median sales price. The median sales price has now increased for 28 straight months. Talk about buyers waiting. I say this, it's like it just keeps every single month. We're still seeing median sales price appreciation, and there's still upward pricing pressure even as the market starts to soften. But just want to note, and you can see in the chart here, that it barely increased 0.3%. And this is the lowest DMV-wide appreciation in that 28-month span. You can see that in June of 2023, we had 0.33% increase. And then the prior month was the most recent month where we didn't have a median sales price appreciation, when there was a slight drop. So pricing pressure is easing a lot, but it's still there, and it really varies tremendously depending on where. We have some areas where median sales price did drop. Median days on market, and this has been consistent with what we've seen recently, and say that there are a lot of signs of a softening market, and one of those is that homes are taking longer to sell. Median days on market is 21 days, and that's a 10-day jump over the same time the prior year. Going into closed sales and new pendings. So closed sales were up 4.4%. No surprise, because pendings were up last month. Anytime you have a month where pendings are up, closed sales are going to be up the following month. New pendings, though, have dropped a little bit. And so this is for September data. Keep in mind, the government shutdown started at the beginning of this month in October. And so these pendings happened prior to the government shutdown. But remember what we talked about, in that historically, the market slows down leading up for a government shutdown because of people anticipated or being worried about what will happen. And that is what we are seeing here. But also want to add, closed sales and new pendings, they've kind of been in this band for quite a while now, just plus or minus a few percent. And that's just kind of where we've been at. And you can see, if you look at the chart, orange represents where we were at this year. And so it's kind of similar to where we've been at all year. It's that we are at the low end of the past 5 years and pretty on track to where we were at this point last year. Okay, new listings. Now, this is something that is diverging. This is a meaningful difference. You can see the orange bar there spiked up. So new listings last month were up by more than 12% over the prior year. And just to remind you where we were at. So we had seen 4 straight months of year-over-year increases in inventory. Then our prior 2 months, we saw declines in new listings, and now there's been a spike. So it's too soon to tell whether this is the beginning of a more serious change in the market and a higher amount of new listings, or whether this is just a temporary blip. But it is very important to know. And if you have anyone who is selling a home in the near future, just let them know that there is almost certainly going to be more competition. Okay, now talking about that impact of new listings related to the market overall, active listings. Active listings are up 39.1% over the same month last year, and this is pretty consistent. So we've had 20 straight months of active listing increases year over year in the DMV. And just want to note, as I always say, so this predates the current administration. What's going on in the current administration is definitely having an impact on the real estate market, but these increases in inventory were caused by more factors than that, and it's been going on for quite some time. Also, I always like to refer back to 2019. 2019 is what I consider to be the last normal market. We are still below 2019 levels of inventory, but we're getting ever so close. There were a lot of times in the recent past where we would be at like 60% of 2019 inventory, 65%, even a little lower. Right now, we are creeping up. We are at 89% of the inventory at the same level for 2019. And so we are getting closer to kind of a normal level of inventory. All right, this is just a summary of the key data. A lot of the stuff I've already talked about specifically when you get the deck. Now we are going to pop on to county-specific data. And anyone, just please, I love this to be as interactive as possible. And so if people are seeing particular things in various areas of any of these counties, or even if you practice a little bit farther out in some of the counties that Bright doesn't touch on in their core DMV, in Prince William or Stafford or anywhere really, it's just wonderful insight to hear people let us know what you're seeing with your specific climates. It benefits clients, it benefits us, it benefits the group. Okay, so now looking at median sales price. And here we talked about, it's like, so median sales price, it really varies depending on where you're practicing. So last month, all areas other than Montgomery County and Prince George's County had year-over-year gains. This month, Montgomery County and Prince George's were slightly above even, but we had big jumps in Alexandria, Loudoun, and a huge jump in DC, which is surprising given everything else that's going on in the DC market. Almost even in Fairfax, and then we were down by a fair amount in Frederick and Arlington. Want to touch on Arlington. Arlington is always so bizarre. And I really, some month, I'm just going to take a day and dig into all this data in great detail to figure out what's going on in Arlington. Anytime I do, it's either it doesn't reflect a real change in the median sales price. Anytime I take a closer look at Arlington, it's that like the division, the breakdown of property types and price points is different. Either there were a lot more cheaper homes that had closed in that month, or there were some higher end homes. And here specifically, so Arlington, detached homes were up big, 14.5%, but then condos and row homes were both down by more than 10% pricing. So across the board in Arlington, detached homes are still facing a lot of upward pricing pressure. Then when you look at townhomes and condos, that's where the drop was. But I want to note, I broke that down a little further into price point. And in the 100,000 to 300,000 price point, every one of their 3 categories, they're broken up in the data I pull into $100,000 groups. So each one of those groups had double or more the number of transactions they had the prior year. So you're having more transactions at the lower end, and I think that's what's pulling down condo and fee simple. Something to note for those of us who practice in DC, you see this big spike in median sales price. So DC has now gone 8 straight months, either near even in median sales price or with increases. And this data, this 13.3%, it's for all property types. Every single property type in DC showed year-over-year appreciation last month, including condos. And I know any of us who have listed condos in DC recently, not the best market in the world. Okay, now looking at closed sales. Excuse me. Closed sales last month, it was a bit of a mix, kind of all over the place, depending on the county. This month, everywhere except Prince George's County had increases in closed sales. Northern Virginia, Alexandria, and Arlington were up really big. And you're going to see this consistently. The buyer market is thriving in Alexandria and Virginia right now. So Montgomery County and DC, both up by more than 10%. Prince George's County is down by 14%. Temi and I actually last month were speaking with a journalist from the New York Times who was writing an article on the real estate market in this area and specifically Prince George's County. And we were looking at, and Prince George's County is a softer market. There's softer buyer demand. We're seeing bigger declines in pendings, and we've been seeing that for a little bit now. Okay, now talking about
St. Charles.
Yeah. So talking about difference in areas, new pendings reflect that. It's kind of a tale of two cities, so to speak. We talked about that overall new pendings are down for the DMV, but this isn't the case across the board. So further out in Fairfax, you can see Fairfax and Frederick, you can see new pendings were up by 2.5%. And then up even more, let's talk about stronger buyer market in Northern Virginia, Alexandria and Arlington, 7 and 9%, and then big drops in Prince George's County and Washington, D.C., which is like Prince George's County makes sense. Prince George's County data is consistent. There is softer buyer demand, and you can see that at various data points. DC is a little odd in that it's like transactions are slowing, but prices are increasing. And we've seen a lot of pricing pressure in this area for a long time. But just looking at the breakdown of data points in DC with what's happening in the market, it's a little surprising. And I can only ascribe that to the fact that it's like the National Guard presence, the government shutdown. There are all of these very unusual factors impacting people's actions. And so it's like you have a lot of people kind of slowing down, maybe pausing their searches, but then it appears that when great properties hit the market, they're still going for a good price. Alexandria is
Maggie.
Northern Virginia is usually pretty strong.
Yeah, Maggie makes a really good point. Like, I'm telling I'm telling all my sellers, like, we only have, one shot to make a good first impression. So anything that we need to do, like we'll delay listing a home just to make sure that we get we get that final power wash. We cannot afford right now to list a home with something that we know that needs work or has an issue. Like, it has to be like impeccable when we list.
Yeah. And that's always good advice. Like, those wonderful turnkey homes will always get you a better return than things that have some problems. But even more so now, it's like the difference between the haves and the have-nots with listings are getting to be more pronounced. Okay, median days on market increasing everywhere. It used to be there was a huge chunk of the DMV where median days on market were 2 weeks or less. Now, median days on market is 3 weeks or more everywhere except for Alexandria, Fairfax, and Frederick. And then when you look at Prince George's County, corresponding to the other data we've seen, those two lead the pack in days on market, as they have now for a while. Median days on market for Prince George's County is 25. DC is up to 40 days. 40 days on market, and that's at the high end of anywhere they've been over the past 10 years. I mean, they've hit 40 or above a handful of times, but it's not super common. Okay, then we go into months of supply, also creeping up. But please note here, it's like other than DC, there's still nowhere with meaningful inventory. So countywide, across all property types, we are still in a seller's market for all of core DMV, except for DC. Excuse me. And as I've done now for a few months now, because particularly now, since I was away last week, this is pushed off by a week. So we're getting towards the end of October. Talking about September data is a little delayed. So I drilled into the weekly data a little bit more, paid closer attention. But as of yesterday, pulled the data from all of the core DMV. And this isn't going to be super accurate because I'm not looking at stretches and normalizing for things over time and levels of under contract and closed and things like that. But it is close enough to be important. And So as of yesterday, there was close to 2 months of inventory in Alexandria, Arlington, Fairfax, Loudoun, Montgomery County, Prince George's County, and Frederick. So there's still, as of yesterday, around 2 months of inventory, give or take, in all of these areas outside of DC. And that is, by definition, a seller's market. Yeah, and that's a great point. Thank you, Virginia. That for a while there was kind of this holy grail of single family homes right around 500,000. You'd see a lot of areas priced out of that number, and so the areas that were in that number, those homes were often in high demand. And Virginia's talking about, it's like now we're starting to see some softening in that price point. And maybe that speaks to what I was mentioning before, how overall in the economy things are looking good, but in people with normal incomes, they're feeling the pain a little bit more. Okay, now we're going to break down new listings. This is the one thing you talk about. There's so many areas now where if people ask me, what's happening here, I wouldn't necessarily be able to make a blanket statement about, oh yeah, that's similar to what's going on in the DMV, or I wouldn't be able to speak in an informed level about that without specifically knowing the data for that area, because things are varying so much. But the two things that aren't are new listings and active inventory. So new listings up everywhere, active inventory up everywhere. You can see here's the same thing. It's a little tight there in Prince George's and Loudoun, a little closer to even. Everywhere else is up big in new listings. And then when you look at active inventory, kind of surprisingly, DC is at the lowest level of active inventory, but Base Effects, their inventory was already up last year, which is why. So don't take it as it's like there's a low level of active listings in DC. It's simply that last year at this time, they already had a lot more active listings than anywhere else. So the year over year change isn't as much, but pretty consistently throughout the area, we are seeing active listings up by 33% or more, except for DC. Okay, now showing level, up overall, down overall for the metro area, up in Arlington and Alexandria, matching that other data we saw, strong buyer demand in Alexandria and Arlington. So that is not surprising. Up a sizable amount in Loudoun, almost 9%, up 2 to 3% change in Fairfax, Frederick, and Montgomery County, and then down by 10% in DC and Prince George's. Now we're going to look at the weekly snapshot. So this past week, we saw showings down, but new purchase contracts up. But the prior week, pendings were down. So it's not entirely clear how buyer demand is going to shake out for the month. But kind of continuing what we saw in September, just want to say into October, pendings continue to be up in Alexandria and Arlington. So when the monthly data is released, what I would expect is that I would expect to see new pending levels for the DMV to be down a little bit year over year as well, but then I expect them to be up in Alexandria and Arlington. So DC was down for new pendings and showings last week and the week before. And so DC proper in September so far is showing a soft market, slow buyer demand. So just keep that in mind. For buyers, that means a little bit more opportunity. For sellers, it just kind of means be careful. Median list price up a little at 1.7% here. Consistent with everything else. Like I said, there are a few kind of key points where you can just say, oh, this is happening, and it'll be consistent throughout the area, and you can be confident in saying that. But one of those is new listings and active inventory. Those continue to increase. New listings up by 7%, active listings up by 35.7%, and this matches what we saw in September. Take a note, though, canceled listings are creeping up more than 50% by the numbers a year ago. Okay. Key takeaways. My key takeaway, the first bullet, has been the same since I started doing key takeaways. And it's now more important than ever for consumers to rely on industry experts and for agents to stay informed as to what's happening. And it's like each time I think it can't get even more important, something happens to make it more important. It's like right now with the government shutdown, even experts are struggling to accurately predict exactly what impact that's going to have in the economy and the real estate market. And so all you can do is get as much information as possible and allow yourself to make an informed decision, or give your clients as much information as possible to allow them to make informed decision. So I talked about the impact of the federal government shutdown. One thing I can clearly say is it is not good for anyone. It's not good for anyone. I mean, other than maybe people in the market shorting things that are now going to be negatively impacted by this government shutdown. But it's just, it's harming everyone. It's harming the economy. It's harming all segments of the economy. So not a positive. So I expect volatility to continue until the shutdown ends. And really only then, once we have more data, can we determine if there's more of a market shift happening in the real estate market, or if a lot of these changes we're seeing are more impacted by leading up to the government shutdown and the government shutdown. So if you're a seller or a listing agent, like I said, just know your market right now, because in some areas, listings are still doing relatively well. In other areas, there's been a slowdown, and you just need to be absolutely aware of what is happening hyper local. If you're a buyer, this could be a great time. We've talked about it. It's a lot of buyers are kind of pausing on the fence. Anybody who's working for the federal government right now, not getting a paycheck, is probably on hold. And so this could be a good opportunity for you. New listings are up, active listings are up. If you have a solid job and now is a good time to buy for other reasons, now is a great time to buy for the market. And apologies for the extra added bullet typo. Okay, Temi, any closing thoughts?
I think just continue to stay focused on any data that we can actually collect, and continue to guide your clients well.
Thank you, Temi. I have my email address on here. If you would like to get a copy of the deck, feel free to email me. Thank you all for joining. Would love to hear, if you're watching this on a replay later, would love to hear your thoughts in the comments. I pay attention to the comments even after the video has been posted. So if you have additional questions of things that have come up from this session, just drop those into the comments and I will respond. All right, wonderful. I will see many of you, all the Fulcrum folks. We're having a wonderful Halloween party at Congressional Cemetery this Sunday. That is always a lot of fun. So look forward to seeing you all there. Everyone else, just have a great rest of your week, a wonderful Halloween, and we will see you next month.
Bye.